Hello and welcome. You're watching ET Markets. I'm Tanya Aneja. Well, with 6 days of non-stop losses, the Indian rupee is now headed for its longest weekly losing streak after 2008. And to decode what this means for you, I'm going to be joined by a very special guest today. We have with us Sugandha Sachdeva, Vice President, Commodity and Currency Research at Religare Broking Ltd. Thank you so much, Sugandha, for joining us on ET Markets.
Thanks for inviting me here at this forum. A very good evening to you.
So let's understand from you, Sugandha, what is causing this continuous decline in the rupee against the dollar? I mean, what has led to the fall?
Yeah, this question comes to mind of every Indian citizen, I guess. And it's not just that Indian rupee is depreciating. It's in line with all emerging market currencies. Indian rupee has slipped to the historic low, reaching past the 80 mark, and we've already seen a depreciation of around 7.5% year to date. So, but then it's not just the story about the Indian rupee, it's basically the story of dollar. So we have seen dollar index surging to a fresh 20-year high. So that's majorly because US is on course for an aggressive pace of rate hike this year, which is driving the safe haven flows into dollar, and investors are actually seeking refuge in dollar. So because of this, there has been pressure on all emerging market currencies. If you talk about Japanese yen, Chinese yuan, Argentina peso, Turkish lira, all of these currencies have also been hit hard. In fact, the depreciation extent has been much larger as compared to the Indian rupee. Rather, Indian rupee is still in a good stead. We have just lost by around 7.5%, which is lesser as compared to many other emerging market currencies. Besides this, if you also see, there have been significant outflows from the domestic markets, equities plus debt. So it's almost $30.8 billion that have been the tune of the outflows that we've seen from the Indian markets. So this is actually pressurizing our currency to a very large extent. Apart from that, we have also seen that there are concerns about inflation globally after the Russia-Ukraine war led to crude prices soaring significantly higher. And we almost import almost 85% of our requirements. And that has led to a lot of pressure on our external balances. The situation is actually deteriorating. And in fact, in the month of June also, our trade deficit has swelled to a record high of $25 billion. So that is a major cause of concern, and it's expected that this year our current account deficit is likely to be the tune of around 2.9 to 3%. So which is in a stark contrast to last year where we saw a current account deficit of only 1.2%. So these have been the broad reasons why our rupee has been depreciating. But then the recent reasons why this week this move has got exaggerated and why we have reached this 80 mark is all because the US CPI print, the latest inflation print, has actually soared to a fresh 41-year high. So that has topped expectations, and that has come in at 9.1%, reaching past the expectations of 8.8%. So this is precisely the reason why now the markets are pricing in that Fed is likely to be very aggressive, because Fed has already made it very clear that they will give priority to bringing down the inflation rather than being concerned about the growth outlook in the US economy. So that is leading to a lot of concerns that US economy could actually dip into a recession kind of a scenario. So this is leading to a lot of outflows, and that's broadly weighing on the Indian rupee. So this is the entire story about dollar index and the emerging market currencies, and rupee has not been spared in line with other currencies.
Absolutely. Thank you for explaining it so well. And also, what are its implications? I mean, how does a weak rupee impact the common people and the economy?
Yes, so it impacts the common man in a very big way. First of all, it makes, everything very costly. If you are importing, let's say, iPhone or other gadgets, we import a lot of things. We not just import gadgets, we also import a lot of fertilizer, edible oils. So they all make up a lot of a part of our import bill. We import a lot of gold. In fact, government has recently hiked the import duty on gold also to curb this non-essential commodities import. So that is also one of the measures which RBI, the government has actually taken to curtail this decline in rupee that we have witnessed. So in terms of the common man, this is the first major fact that our imports become very costly. Second factor is your foreign travel becomes really expensive. And the third is your education cost. The foreign education becomes really dearer. So these are the ways in which it is going to impact a common man. So in terms of the economy, obviously this is very negative for the Indian economy. To a certain extent, yes, it helps to boost exports, but yes, the imports are actually becoming very costlier and leading to a widening of our current account deficit. Our external balance situation is deteriorating. So these are the broad reasons why government and RBI are taking a lot of steps to stem the decline in rupee.
Okay, all right. And where is the Indian currency headed according to you in the near term? I mean, is the rupee likely to see more decline?
Yes, we are expecting some more decline, but yes, I think most of these factors have already been discounted in the market, and we are almost, I mean, we have already seen a steep depreciation. So now what we are eyeing is, I think the Indian rupee is likely to hover in the band of around 79 to 81 range in the at least near to medium term. So as of now, markets are jittery before this Fed meeting, which is lined up towards end of this month, around 27th of July. So till that time, I think the markets would be very jittery, and as of now, they are pricing in a full percentage point rate hike. It remains to be seen whether the Fed actually delivers a 75 basis point rate hike or a 100 basis point rate hike. So that will provide further cues. Besides this, we also have ECB meeting, which is lined up next week. So we have already seen euro and dollar at parity. It was after 2 decades period that we have seen this parity. So this has become a very sacrosanct level. If we see euro breaching parity, I think we are in for further appreciation in dollar index. But then as of now, I think there would be some pressure in dollar index, and that will provide some floor to the Indian rupee. So we are eyeing 81 mark, but then that should remain a very strong floor area for the rupee. And we are not seeing Indian rupee breaching past 81 mark as of now. So RBI has been intervening and will continue to intervene with our strong kitty of forex reserve, which stand at almost $588 billion. So I think they'll continue to intervene, and that will actually protect further slide in Indian rupee.
Okay, absolutely. And on that note, thank you so much, Sugandha, for taking the time out and being with us here on ET Markets today. Thank you so much.